Some pretty big news on Apple today. Goldman Sachs just added the stock to its conviction buy list. Now, while shares haven't moved all that much in the past year for this tech giant, will this help move the needle? Well, joining us now with his own strong opinion on Apple is Mark Yusko, Chief Executive Officer and CIO of Morgan Creek Capital Management. Mark, great to speak with you today.
Thanks, Morgan. Great. Thanks for having me.
So you two are really positive on Apple. Now, as I mentioned, the stock has done nothing to add to investor portfolios over the past year, yet you think shares could double. Why?
Yeah, well, I think a couple things happen with big companies like this is they tend to have impulsive moves on some big announcement or a big change in product line that happened about 18 months ago. There's a big move as it doubled off 60 to 120. And then it has to digest that move. So I think it's been, there was some disappointment about the latest product launch. But I think the 7 is going to be a big change in their lineup.
Yeah, so given that fact, is it a good time to buy Apple shares right now?
I think it's probably a good time to think about substituting the A, like I say. So we've got FANG out there. We've got Facebook, Amazon, Netflix, and Google. All have had these huge runs. And I think maybe taking some chips off the table with Amazon and replacing it with Apple is a great idea here.
It's interesting you say that about Amazon, especially as we come into the holiday season and the company's getting ready to roll out all of its sort of online doorbuster deals.
Yeah, I think there's a challenge in the old, buy the rumor, sell the news. The lead up to the holiday season is always usually a little better than the actual holiday season. There are a lot of fears this year that sales are going to be down. There's going to be a lot of discounting and profit margins are going to go down. So I think retail could have a tough time. And Amazon's just been in fuego for a long time here, and we think Apple is poised to outperform.
Okay, so Apple, you like Apple. Let's move out of the country as well, because I know you're also excited about the Chinese internet e-commerce stocks. What's the big news there? Why?
Well, the big news is, the MSCI China Index is going to include 14 of these China ADRs in their index at the end of this month. And we think that's going to drive not only passive money, because people who are in the index must buy, but also active money that follows some of the ETF and passive indices. So we think names like Baidu and Tencent and VIPS are going to do quite well as they get included in that index. Plus the fact that they really haven't done well as people have sold off a little bit and nervousness about the China slowdown. But the China consumer is not slowing down at all. Huge gains in retail sales and e-commerce growth there.
Yeah, and so bottom line, if an investor has some money to put to work, your top pick, your top area for somebody to put that money, where should it go?
Yeah, we really like this China story. We think if you look at the Chinese e-commerce market, McKinsey says it's going to grow 26% per year compounded over the next decade. They say the mobile component of that is going to grow 52%. So you do 1.52 to the 10th power, you get 65 times the size of the market. We think we can make a lot of money there. So companies like Tencent and Baidu, VIPS, JD.com, we think all those things will do quite well.
Great. Mark Yusko, thanks for talking to us about this today. Thank you
Thanks,
for watching.
Morgan.
I'm Morgan Brennan. Have a great day.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.